The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Show. I'm Steve Rhodes, and right now we've got the Dow is flat, up about 23 pennies right now. S&P is up a point, composite up 8, small caps up 3, New York Stock Exchange up 15. That's where we're going to start off. Taking a look at the NDX 100 up 6 points, the transports up 21 over in Europe right now. The DAX is up 30 points, the FTSE up 18. Flat market here in the way of gold. Gold's back $3. Silver is up 4 pennies right now. Light sweet crude up 10 cents. Our call number, as always, is 877-927-6648. And let's go take a look at the New York Stock Exchange. This is the baby to be taking a look at for sure. New York Stock Exchange yesterday, if you're watching us on Tiger TV, maybe you're listening in on the radio, your mobile device, thank you so much for doing that. You can always catch an archive of this show on Channel 10. The candle, New York Stock Exchange, folks, that is the index that really, is most overlooked, yet it really should not be, because it gives you the larger breadth of what's going on inside the marketplace. And as you take a look at yesterday's candle on a Steve Richter scale, from 1 to 10, 1 being the strongest out there, or most bullish candle, 10 being the least bullish candle. That is a number 1. That is a powerful candle out there. That candle opened at 83.4662 and closed at the top of its range. Doesn't get any stronger than that. That strength going right into a candle that would be, on a weakness scale, probably, again, 1 being very strong and 10 being weak, moving into a candle, or a couple of candles here that fit the type 2, type 3 category. Those candles being the following. Number 1, you've got the December 12th level. That is a shooting star candle. You can see how the bears came in, pushed that trading session down lower. Now, the top of that candle is 84.3356. Right now, the New York Stock Exchange trading out at 84.2523. It did get up over that level. It got up to 84.3284. So it didn't get up over it. It got almost over it. You then can move back to the sideways. When I say back sideways, move back to your left. You run into a type 2 candle. That is your October 19th. This candle here opens at 83.01, moves all the way down to a low of, the low was 83.01. It opened up at 84.23. That is on October 19th. Out there. So that is an area of resistance. That also being an area of resistance by the swing point of October 18th. That low is 84.17. Now, you do have the New York Stock Exchange traveling up in there. That resistance line, that's the red horizontal line going across my screen, also being set up by the October 5th high. That level is 83, the high of it is 84.42 out there. And then you've got the reversal candle here, the shooting star candle from September 14th. On the New York Stock Exchange that then had follow through on that next trading session. The low there is 84.37. Again, you're trading at 84.25 right now. So the New York Stock Exchange, although having very strong candle patterns on the way up off of the November 16th area, moving in towards that overbought. It isn't there yet, but it is moving into that overbought area. And at the same time that it is doing that, moving into a area of resistance out here. So that is the line that has been drawn in the sand. I say the New York Stock Exchange is one of those stock charts that you're going to want to be paying attention to. If we take a look at, let's go look at the other indexes out here. Let's take a look at the Dow. Let's go see what the Dow is doing. The Dow is up $3 right now. The Dow, let's go ahead and get rid of this ultra short-term trend line out here. That's this little red diagonal line. So if we take a look at the Dow, this is a little bit better picture of it. You can see the Dow also moving into an area of resistance. That area is that black horizontal line going across my screen. You can be a little bit flexible. You need to be a little bit flexible quite frankly, with this. You're not looking to buy the exact tick or sell an exact tick. You want to make sure that you use a large enough stop in whatever it is that you trade, because swing points, we don't know where a market is going to go. That's why when you decide to take a trade, you make sure you use a wide enough stop. All you have to do is just simply adjust your position size. What that means, folks, is that you start with risk. You always start with risk because it is the only thing you and I can control in this game, and it's a great thing to be able to control that risk. It should be no more than 1% of your trading capital. So as an example, if your trading capital is $10,000, 1% of that means $100. That is all you're going to risk on any one trade. Then it's just a matter of figuring out how large is your stop. If it's a $2 stop and it's a $100 risk, take $100, divide it by 2. That says you can buy 50 shares of whatever it is that you're trading. Just make sure that that $2, that stop that you use, is outside the average daily volatility. If you don't know what that is, or you would like to learn about that, you can go to the homepage at tfnn.com. I'll do that for you here real quickly. Go over on the left-hand side. You'll see a little up arrow and down arrow. Click until you see the power of position sizing. When you get to the power of position sizing, it is a calculator that I have used that makes it very easy for you. If you want to do this on your own, all you need to do is take a look at high to low of the last 10 trading sessions. Make sure that you account for gaps as well. Divide that by 10, and that will give you a good idea of what the average true, that will give you, not a good idea, will tell you what the average true range is. I like to make sure that I'm using some type of Fibonacci expansion of that in order to enter a trade. And the more volatile, the wider the stops. That's real key. A lot of folks believe that in a volatile marketplace, you use a tighter stop. Now, just step back for a moment and think about that. A volatile marketplace means you've got a wider price spread from high to low. I know the natural thing would say, geez, if it's really volatile, I should use a tight stop. Just the opposite. Oftentimes, in trading these markets, you really got to take a look at just the opposite. Right now, everybody in the media, first, I think they got this whole fiscal cliff thing wrong. It was just simply name wrong. I'm not going to go there. I'm not going to share with you my political views or my views on that to a certain extent, but you can probably figure them out. But they certainly named that one wrong. That was all about fear. I hate fear. Fear is nothing more than false evidence appearing real out there. Fear is something that you want to be able to take advantage of. In any event, you've always heard about selling the news out there. If they do come to a agreement, whatever that agreement is, how good do you think that's going to be for the economy out there? Very good chance of what we're going to see is a selling of the news, maybe a pop, and then a huge drop out there. That is going to put some coal in some people's stockings. But let's not get off point right here. I just want to make sure that in a market where you've got a real trend, where you've got low volatility, then you can back it off, and maybe it's 1.272 of the average true range, but it always, and I mean always, needs to be outside the average daily noise, because otherwise you're assuming that you know where the market is going to stop. And I don't know anybody that can figure that out. We've got guidelines, and that's what we use these things. That's what I love most about that movie, Jack Sparrow in the Pirates of the Caribbean, that first movie. My daughter and I and her boyfriend on Friday were reminiscing about that movie because she won tickets to that first movie. She was obviously a wee bit younger at that stage. And the line that I loved from that movie was just simply that this was a guideline. That's what you use when we take a look at the Dow Industrials right here, the horizontal resistance area. It's been set up there. That's that black horizontal line going across my screen. That might be the high of November 1st out at 13,273. It might be the high of November 6th out at 13,290. It could even be the high out here of December 12th. Where the market sold off out at 13,329. You get to close above 13,329 with some type of conviction, some type of volume behind it, volume or not. You get to close above that level. What that will do is that will set the Dow to move up to its next swing point. That, quite frankly, takes it into the October 18th, and is an October 18th, as we know, is actually inside, well, it just takes it up to the next level. That next level would be just a tad higher. That's that other black horizontal line going across the screen. So it's very easy. You can play a move here where it's up against resistance, or if you are a person that doesn't like to buy what we'll call a counter trend move and you want to be a momentum player, then what you want to do is or if you're in a long position here, you would add your long position if the market closed above 13,329 out there. That is on the Dow. Let's go take a look at the S&P 500, the SPX And that is trading right now at 1433. That's trading right into the resistance line out here. That resistance line set up really by the downdraft of October 23rd, as well as the high of November 2nd out there, as well as trading into the candle of December the 12th. I believe that was last Wednesday. Let's see, today's Tuesday, Monday, Friday, Thursday. That was last Wednesday. Okay, how's that for counting backwards? That was last Wednesday. That is a resistance area. You get a close above 14,039 in the S&P cash. That's going to set up a price move up into the October 18th swing point. That level 1452 to 1464. That is on your S&P. Let's go take a look at the Russell 2000. Let's go take a look at the Russell 2000. It is trading here at the 839 level. This is trading up against an area that so far today, so the close on the Russell 2000 will be key. It's trading up inside an area that was a gap down. That is the candle from October 18th. That low is 837.12. That area has held, only been really tested once. That was the day where there was a key reversal inside the Russell 2000. That was December 12th out there. It was also a bearish engulfing candle. Today, even though it's testing it a little bit higher, you got to give it, like you're fishing, you got to give things a little bit of room to run. If you're bearish, you want to see it close, quite frankly, back below the candle from October the 18th, back below 837. So I'm really talking to myself. I want to see it close back below 837.12. That would be a failure at a horizontal resistance area. There are others out here. The others are really where it's trading, maybe going to try to get up into. That's going to be the October 5th level. The low of October 5th is 841.58 out there. So that is the next area of resistance on the Russell 2000. If we go take a look at what have we missed out here? How about the NDX? We probably missed the NDX. We missed the SOX. So we're not going to miss those, and the transport. So we'll take a look at all of those. So we take a look at the NDX 100 right now. If we take a look at this is trading up at 2678. You can see the horizontal resistance line of that is the red line going across my screen. That is really set up by the highs of November 5th. That was tested on December 3rd and really tested on December 12th as well. That level is right about the 2694-ish, 2695 range. 2679 is what the NDX is traveling at. Price line having a good morning out here, up about $10. That's up 1 6/10%. You've got Amazon is up $5. We'll go take a look at Amazon. Panera Bread up $4. That's up 2.5%. Fossil also inside the NDX up 3.5%. Apple up about $4 right now. So there's your energy sources with inside the NDX. But the NDX needs to take out that area of resistance. And then if it takes that area out, you'll take a look at the NDX. Will want to try to get up into that diagonal trend line. In this case here, the NDX coming off of the October 4th level out there. But first it's got to get over the horizontal resistance area. Let's go take a look at the SOX out here. Where is the SOX? The SOX yesterday having a sideways day, trading out right now at 386. Looks like the SOX here doing nothing more than just a retracement from its most recent highs to lows. 618, just slightly higher. 877-927-6648. Dow's up 12. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 24 points right now. Let's go out to Fort Collins, Colorado, to Tony. Tony, thanks for calling. Thanks for holding. How are you today?
Good. Thank you for having me on.
My pleasure. My pleasure. So, I see that you guys are going to have the World Cup of Skiing out in Colorado in 2015, I think. Was that announced yesterday, or when was that announced?
Yeah, it was announced earlier this week, I believe.
Earlier in the week. I just happened to catch some event last night as I was kind of surfing through some news. So that's cool. Out at Vail, I believe, right? Vail and Beaver Creek.
That'll only happen if we get some snow.
Oh, okay. All right. Well, it's not for a few years out there, so 2015, yeah. I think. So you guys still haven't had much in the way of snow this winter?
Not much. We've been getting a little bit this week, so hopefully by Christmas the ski areas will get a good amount. So.
Boy, they need it. Oh, all right. We'll all send out some white light for some snow for everybody in Colorado. So you wanted to take a look at the cues. Tell me what you're doing, how I can help you out.
I did. I like to play the cues, and I was looking for a short. There seems to be a area of demand that we're coming up to, but I'm not sure with the rally that happened yesterday if that's still advisable. I'm looking probably wait until it gets up to about 100 area before short.
The 100 area on the QQQ?
Yes.
100. It's trading at 65.96. I'm
sorry, not the 100.
But I mean, no. Go ahead.
Go ahead. I was just looking to see if there was a short coming up.
Yeah. No, sure, no problem. So if we take a look at some supply lines out here, right now, first the Qs. I've got two red horizontal lines drawn on my screen out here. The top of it is really where it's likely headed to, which is the November 6th high, 66.17. It's at 65.96. The volume on that swing point's only 29 million shares, but you got a downdraft that it's really moving into, which is the December 12th. So I would be paying close attention to the December 12th area. The low of that candle is 65.65. Let me adjust my glasses here. 65.65. It's trading inside there right now at 65.93. The high of that candle is 66.32. So I would wait to see if it tests the high of 66.32, does it on less than 45 million shares, closes back below 66.32, then your back would be up against the wall, and that's where you would take a look at putting on a short position inside the Qs out there. So that would be the first place that I would look. And you've got some pretty decent downward pressure from a volume standpoint. October 19th is the candle that's got 75 million shares to the downside. The low on that is 65.60. That ideally is what you want to see. Is you want to see it get back below that area if you were in a short position on the Qs. The other thing, Tony, that I think that you should be paying attention to in trading the Qs, and you probably already know that, is Apple. And I would go back over to the Apple chart and see what it's doing, just simply because of its weighting inside the Qs. It's not the only thing that certainly is going to drive it, but you'd like to have that as a tailwind, or a down, whichever direction the Apple is trading, be helpful to understand that. In the case of Apple, sure, I've got a 5-minute chart, so I've got kind of an ultra short-term chart just to give people an idea of where Apple is trading and why it's doing what it's doing right now. Number one is on the 5-minute chart. You've got the bar from 9:35 in the morning on December the 6th out there, and that had 3.7 million shares. That's the two black horizontal lines going across my screen. You would become more bullish if you get a close above that 529 level, because that is an area right now of supply. So when Apple gets up there, folks that got in and took a long trade there, they're just saying, you know what, I'd like my money back. It's Christmas. That's really what's going on. Also, on the 5-minute chart, as Apple made its move up this morning, moved into what would be called real extreme high relative strength index, which gets you into that overbought condition. And so right now, all it's doing is just moving sideways. It's digesting. It's doing what it should be doing. So it has it, as it trades inside that swing point, it's relieving the pressure. Hasn't given us really any indication whether it wants to go higher or lower on the intraday chart. Just tells us what it's doing and why. And so it becomes fairly easy to read that EKG. It's that daily chart you got to pay attention to, and that is just simply what you want to see. Let's say today a failure would be a close back below 525.80. It's at 523.09 right now. Let me make sure that's the right number I'm looking at. Yeah, 525.80. So a close back below 525.80 on less than 22 million shares. That would be setting up an area of resistance. That would be a failure. So those would be the parameters that I would look for.
Excellent.
All righty. You bet. Have a Merry Christmas. As we go into break here, folks, we got the Dow is up 34 points. The S&P is up 5. We're going to start taking a look at some of these stocks that are popping and dropping. Dropping to the downside this morning, you got FactSet Research, FDS. They're down 5%. Lorillard is down about 2.5%. Regeneron Pharmaceuticals, Sturm Ruger off about 5%. You could expect that with the tragedy we saw last Friday. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 44 points. Taking a look here at the financial sector of the S&P. That is strong. Right now it is trading, looks like it's trading up and over that September 14th swing point high, 1644. Yeah, it's trading at 1647 right now. That has 122 million shares on September 14th. Two high volume bars as it was making a high out there. The financial sector here getting up over a resistance area. If you get a close above 1644 today, the XLF will be set to move to higher levels. Let's see, where are those at? The next high level is going to be your swing points back in April of 2011. That would be in the 1672 range. Again, it's trading at 1647. If we take a look at volume here today, so far volume about 18 million shares in an hour's worth of trading. Yesterday it did 69 million, so it looks like it's having some additional follow through there. That is on the financial sector. Let's go take a look at the energy sector, see what kind of energy is behind the energy sector. That would be the XLE. That is traveling right now at 72.57. That is the price point it's running. It's going to run into a resistance level that has been tested twice. So today would be the third day. Maybe it's really been tested 3 times already. That resistance level that we're talking about, folks, is October 22nd. The low there, 72.72. That was tested here on November the 6th. That was 10 million shares moving into 10 million shares, so kind of even Steven, and then tested again on December 12th with 9 million shares. Let's see, so far today the volume is 2.2, so good volume with an hour's worth of trading in there. So it's going to try to tag that area again, that area being 72.72. The high thus far today has been, 72.72, and the high so far today, 72.62. How is that? Did it already test? No. My eyes are deceiving me. 72.62 is today's high, and it wants to test 72.72. I guess it has tested it. Wait a minute here. 72.72. 72.62, 10 cents away. My apologies, folks. Man, that was a total brain fart right there. I won't let that happen again for the next half hour at least. Let's go take a look at some of these stocks here that are popping and dropping. Let's take a look at Under Armour. Under Armour forming a hammer candle yesterday, so it is trying to show its strength in armor. Under Armour has shown us where the bulls are hanging out. And that is really coming down to this swing point that it was testing yesterday. Under Armour gapped up, broke out on July 24th. Now, the real support level of Under Armour was the trading session of July 23rd. July 23rd, the low there was 47.33, 2.9 million shares. As price moved back down yesterday, it moved down with 4 million shares. So that was 4 million shares really going against 10 million shares, going against the breakout day of 2.9, but it's really being benchmarked against that 10 million shares. Under Armour came back to the breakout area, came all the way back to its last sign of strength, did it on lighter volume, gave you a hammer candle, and today also giving you some follow through. So that is that. We know where the line is drawn in the sand between the bulls and the bears on Under Armour. It's clear. Now, where could Under Armour travel up to? Well, pretty simple. It's got a resistance area that's really set by the last swing point of November 29th out there, out at 55.20. Also happens to be a little downdraft on October 25th. That downdraft did have volume, but it was only 6.9. So Under Armour is in a sideways consolidation. The low of that range being established yesterday. Of course, it was really established by the breakout session of July 23rd out there. That is on Under Armour. If we take a look at, let's go look into, we're going to kind of switch back and forth here between some stocks that are moving, but let's go take a look at the a couple of the Dow stocks, the Dow 30. Let's go see what IBM is doing, because you got the Dow up 45 points. So let's go see what IBM is doing since it's the number one weighting inside there. So IBM trading up into a resistance area. That resistance area has been tested. That's the day of November 6th. November 6th, you get a gap down. You're not with so much strength, really 4.7 million shares, but it's that open window that is acting as resistance, that being 194.68. Right now, you've got IBM traveling at a price of 194.76. So it's trying to do some repair work. It is trying to repair that area of resistance. If you do get a close above 194.68, that no longer becomes the resistance zone for IBM. You've got a swing point out there. It still is a swing point. Once a swing point, always a swing point. The next piece of information that IBM would give you would be at the 196.75 level. That is the high of the November 6th area. As we flip back to, let's take a look at some of these stocks here that are moving and grooving. How about Chipotle? Let's go take a look at CMG is the ticker symbol. And let's go see what Chipotle is moving into. This is the monthly chart on the screen. But let's go put this down into a daily chart and see what it is doing. So you got Chipotle went ahead and repaired its resistance window yesterday. It moved up with 671,000 shares going into 2 million shares. That was the easy test on a downdraft. It was really going against or being benchmarked against the volume of 6.3 million shares, the downside on October 19th. However, that resistance window is repaired, so we can go ahead and we can remove that line. Now what you've got Chipotle doing is really moving into the next area of turbulence, which is going to be the downdraft from October 2nd. That low is 290.15. It is traveling inside 290.15. Let's see if it is now taking out a swing point with volume. The swing point we would be looking at would be November 7th. That has 1 million shares. Yesterday, as I say, it got over with 671. So it did not confirm an A to B equals CD up at all. Let's take a look at retracements now. Off of the highs in Chipotle were 351.80 back on September 17th out there. The low established on October 23rd. Looks like Chipotle will go ahead and move up to sweet 618. It looks like that price level is right around the 306 and change range. Looks like that is where Chipotle wants to head up to. Oh, here's the other. There we go. Most certainly it does. Now what we do is I went back even further. If you go back to the July 20th level, July 20th, the low is 307.20, 9.7 million shares. So at 307.20 and at 306 and a change, which is the 618 level of just simply this last leg down here, looks like that's where Chipotle wants to move to. Now let's see if we happen to have a 0.382 retracement line up with that as well. That would be coming off the highs in April of 2012 all the way down to the lows, and we most certainly do. Let's put those lines in black there. So what you can see here is coming off of the highs. It looks, I think that was the all-time high, right? Yeah. So the all-time high of Chipotle, which is April 13th, 442.40, all the way down to the low that was put in here back in October of this year. The 0.382 level takes you to about 313 and change. So right below that, we know we've got the swing point downdraft, the low of the July 20th level at 307.20, and then just slightly below that at 306 and change is the 0.618 level. That is where Chipotle is headed to. Let's go take a look at Fact Set Research. FDS is the ticker symbol. Let's go see where this is trading into. FDS. FDS here gapping down this morning. This thing has had some signs of weakness in it. That first sign of weakness, big sign of weakness with selling taking place on June the 12th out there. This morning here gapping down. It's got some volume behind this move, 687,000 shares trading inside the bullish engulfing candle from November 15th out there. The high of that candle is 91.29. This wants to travel all the way down to that low. So that had 944,000 shares already today, 687. So until it gets down to that low, maybe that low may act as a support level. I won't know till we get down there and what type of volume as it tests the 87.59 level. That is your swing point from November 15th. That is on Fact Set Research. Let's go take a look at Sturm Ruger, see if there's any volume behind its move. It's not down. Well, it is down 5%. RGR is the ticker symbol. So, it is down most certainly with volume out here. So let's go take a look at this equity and see where this is headed to. We'll put this on let's put this on a longer term chart. So first right now you've got Sturm Ruger taking on a swing point that had volume, or a candle that had volume, which would be the day of August 2nd, 2012. 2.5 million shares. The low there is 42.19. It's trading at 41.60 right now. So it is trading through an area of support unless it closes back above 42.19. Volume, though, today so far in just an hour and 15 minutes of trading, 1.2 million. So that's 1.2 going against a full day that had 2.5. Looks to me like it's going to have volume. What does that set up? That sets up coming back to the swing point out here. Let's see if this is the first real sign of selling here. Major sign of selling. Let's put this on a weekly chart. So let's take this back weekly. We can always dive back into this thing on a daily chart. So weekly, what this says, it wants to come back and test the swing point from the week of June 8, 2012. That low is 34.22. The high is 38.34. That is where she is headed. Let me just refresh my screen, make sure I've got all the accurate volumes out here. What we can also see is that it should find a little bit of support before it gets back there. The key here on Sturm Ruger is going to be how it handles that week of August 3rd, 6.4 million shares there. So you got some pretty decent support at 39.06. A close below 39.06 says that it will go down and test the swing point low of June 8, 2012 out in the $31 level. That's on the weekly chart. Those weekly candles, that is a bearish set of weekly candles for sure. The last time we saw this pattern was back here in June of 2012. Now let's go take a look at let me put this on a monthly here for us real quickly. on a monthly. That's a nasty-looking candle out here. The monthly is right now, it's trading into the month of June of 2012. That high is 41.49. So you get a close below 41.49 as we come into the end of the year. That says for sure it wants to test the low of June. So you got some uniformity there. And on the daily, we know it's breaking through an area that should act as support. Breaks through that, it sets up moving down into June 8th of 2012. Let's go take a look at something that's moving to the upside here. How about Panera Bread? Haven't looked at Panera Bread here for a while. Haven't actually been to Panera Bread for a while. That is moving up here today. So let's take a look at this equity. This had a so it's trading into a area that was acting as a resistance line. That resistance line was going back all the way into the March 15, 2012 time frame out there. It's trading right into it right now. Let's go take a look at a more recent, though. Let's see what this is actually moving into from a swing point standpoint. This equity, Panera, its most recent breakout session was on October 24th out there, and the volume was 1.3 million shares. The low of that candle, which it's trading or close to trading into, the low of that candle, 166.21, 1.3 million shares. Today, though, it has done 140,000 shares, so it likely doesn't have the volume as it approaches really that area. So this is not giving us any really great signals out here. It is taking on its most recent swing point from November 29th that had 362,000 shares. But this thing here may just simply be consolidating, high-level, upper-level consolidation. It has to get back above this red horizontal support line. That is on Panera Bread out there. Let's go take a look at Amazon. So AMZN is the ticker symbol. Let's go see what Amazon is doing. That is up this morning here. Amazon is up $5, so that's up about $2 and change. Yesterday having a type 1 candle out there from a power and strength, and today it's got follow through as well. As we take a look at Amazon heading back to the swing point high of November 14th. That has 3.7 million shares. Yesterday, as it was moving up, 2.2 million shares. So far today, 1.5 million shares. So today has got more volume behind the move on Amazon as it moves back into its swing point highs, doing it with good volume. Look for Amazon. Looks like Amazon now will go ahead and test that swing point high. That is $264.11 out there. Amazon also taking on its most recent swing point, and that has 2.8 million shares. That would be the December 5th area. So it looks like it's going to do that with volume because it already has 1.5 million shares. So Amazon looking very strong here right now at the moment. Let's put this on a longer-term chart as well. Let's put this on the weekly chart. And the weekly chart, that is its all-time highs. So on the weekly chart, it's coming into that September 14th area, 14 million shares. Of course, I only have volume here. Today is Tuesday, really, from yesterday's volume. But it's going to need, yesterday was the 2 million share range, so it's going to need some volume as it takes on that area. Again, that high is 264.11, but Amazon showing some strength today for sure. Let's move over to the other side. Let's take a look at Whirlpool. Whirlpool is off about $2 here. This has been a very strong stock. The ticker symbol WHR again. And so Whirlpool just simply up at its high level. It had completed a 1 to 1.272 A to B equals CD. We get back from break. We'll take a look at Whirlpool, go over and take a look at the weekly chart. But you can see this is trading also into its highs, or wants to get up into the highs, which would take you back to April of 2010 into the 118 area. 877-927-6640. Dow's up 57 right now. S&Ps are up 9. Gold. Let's see what gold is doing. Not much. Down $4 and change. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Let's go out to Altamont Springs, Florida, a place that is near and dear to my heart. Let's go to Kem in Altamont Springs. Kem, thanks for calling. Thanks for holding. How are you?
Okay, how are you doing, Steve?
I'm doing great. How long have you been in Altamont Springs?
It looks like a couple of years now.
Couple of years. Back in 1983, I opened up the largest computer retail store in the United States, right at the across from the Denny's in Altamont Springs. You know where that is? I think it's maybe a furniture store there now.
Yeah, it is a furniture store there now.
Okay, it used to be the old tire and battery building of Montgomery Ward's, I believe it was. And there was a 13,000 square foot facility that we opened up, near and dear to my heart for sure. We went in 5 years. We opened it in '84 was when we opened it. In 5 years, we went from zero to $100 million in annual sales. That was a big, now not out of that store entirely. That was throughout the state that we did it. But great place, Altamont Springs. What brought you down? What brought you to Altamont Springs?
I actually have a spinal cord disorder, and I needed to be in a warm place.
Ah, okay, good. Where did you come from?
From Michigan.
Oh, how about that? Well, Florida's, Michigan's Lower Peninsula. What part of Michigan?
The Detroit area.
Oh, how about that? Similar paths that we have crossed there. You wanted to take a look at at WF is the ticker symbol, which is a company named Worry Finance Holdings. Is that right?
No, that's not it. It's WFC, which is Wells Fargo.
Oh, okay, good. Thank you, because I was struggling to tell you what to do with WF. So WFC, that's a little bit different thing here. So, okay, Wells Fargo. Tell us what you're doing and how I can help you.
I actually have a call position on it. I have a short-term call that's going to expire on Friday. I got a $34.50 call.
Okay.
And I've more than doubled my money already. I picked up those calls for 18 cents, and it dropped a little yesterday, and I picked up some more for 11 cents. And right now they're currently, let me go over here and look here. Right now those same calls are going for 50 to 53 cents right there. What I'm looking actually is to possibly put on a stock position to start buying maybe 100-share blocks.
Okay.
And I'm looking at a chart. Let me look at your chart. I got your chart here.
Okay.
I'm looking at a chart here, and I'm looking at the volume today.
Yes.
And the volume today looks like it's going to be enough volume to test the area. Let me get this.
The gap maybe from October 11th, the gap down?
Yes.
Yeah.
That's exactly what I'm looking at.
Yeah, and it should, because that's got 23 million shares there. But what it's really going against, though, your benchmark is the 61 million shares. So
61 million.
Yeah, you really want
to.
That's right. You want to benchmark that October 12th level, because in essence that's what it's really going against as it moves up into that area. So you got a great trade here. And what I would do is, so if you're looking for a stock position on this, if you take a look at the stock chart here, see how the red squiggly line on the bottom of my screen, it is up towards the upper end of the two black horizontal lines.
Let me go over here. I'm looking. Yeah, I can see that. Yeah.
Okay. Look at each time that this equity has gotten up there. It has either moved sideways or it has begun a move lower. You really want to be buying this equity when it's down towards the bottom of those lines. But here's what we're going to do. The show's going to be over in about 10 or 15 seconds. Would you send me an email, steve@tfnn.com, and
Sure.
I'll send you a couple of stock charts on that. I have to do that for an ex-Detroiter and a current Altamont Springer out there.
Okay.
All right, so do that for me, and I'll get back to you. And thanks so much for calling. Have a Merry Christmas, folks. We're about to end the show. Stay tuned for Basil Chapin. He's up next. Then, as we do on Tuesdays, we go up to Victor Jones. We've got Daryl Martin after that, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. Thanks so much for being here. Have a great Tuesday. I look forward to seeing you in the morning. Take care, folks.